Most beginners lose money when it comes to investing, not because investing is hard, but because they do not understand the basic principles of investing. If you're just getting started and want to avoid making costly mistakes, then this video is for you. In this video, I will share with you from my over 7 years of investing in the stock market, crypto markets, real estate markets, money market, which covers commercial papers, mutual funds, treasury bills, and so much more. You will learn not just how to avoid costly mistakes, but how to build long-term financial wealth via investing. Hi, my name is Ogochukwu Okolocha. I'm a personal finance evangelist, and on this YouTube channel, I talk about money, personal finance, investing, business, entrepreneurship, and everything that pertains to how best you can utilize the income you earn today to build transgenerational wealth. If you just found this YouTube channel, please hit the like button, hit the subscribe button, and I assure you that every moment you spend on this channel would be worthwhile. Tip number 1, start early. Just like with anything in life, when you start investing early, it gives room for you to learn from your own mistakes and recover from them. When I started investing in the crypto market in 2017, I didn't know what I was doing. But luckily for me, I wasn't earning so well at the time, so I only invested a few dollars here and there, made some profit, but also lost some money. In hindsight, if I think about it, if I started maybe 5 years ago when I started earning quite some good amount of money, my losses would have been very fatal. So aside from giving time for investment to compound, when you start investing early, you also acquire knowledge that will be useful for you as you grow. Of course, money that you earn today will not be the same that you earn in the nearest future. So by the time you start earning the big bucks, you already know what to invest in, and you don't need anybody at that time to guide you. Because we're faithful in little, so also will you be faithful in much. Tip number 2, invest consistently. You may have heard me say that investing is a marathon and not a sprint. It's not the day you start investing that the day that you profit from it. Many people get into investing with that wrong mindset. They think that it is like Bet Naija or some other form of get rich quick scheme, that they want to invest in a particular crypto or stocks today and then withdraw next day. No, that's not investing. Investing requires you investing consecutively over a period of time. That could be 3 years, 4 years, 5 years, especially when it comes to volatile markets. If it's a low risk asset, you're looking at 6 months, 1 year, and so on. So getting started does not mean that you only invest one time, like some people do. They just invest once in a year and that's it. No, if you want to take advantage of volatile market like the stock markets and crypto markets, you have to invest consistently. And I recommend for salary earners, the minimum frequency for you should be monthly. Anytime you get paid your salary, deduct a certain percentage out of it and then invest it. Do this on a regular basis. That is also one way you can help to minimize the risks in the markets. The third tip is invest in what you understand. There are several investment opportunities out there available for you, from real estate to stock market to mutual fund to crypto markets. There are a couple of opportunities out there, but I usually recommend that you start from investing in the one that you understand. So choose one, learn how it works, and invest for a period of time, then you can jump into another one. When I started out investing crypto market in 2017, I spent some time focused in learning how it works, made some mistakes, lost money, and recovered from it. Then in 2020, I started investing in the stock market. So you see, I had about 3 years gap to understand how one market worked before I moved to another, because the crypto market and the stock market quite complex. I mean, if you want to really go deep into it. So it's good that you understand one per time. For me, I didn't have any guidance at the time, and that's why it took me quite some amount of time to learn how the crypto market works. But for you, having someone like me, you don't need to spend 3 years, 3 months, or even less is enough to get you to understand how the crypto market works or the stock market works. And today, I now invest in the real estate market, mutual fund, commercial papers, and so on. So just about 3 years ago, I started investing in the real estate market, and then commercial paper about 2 years ago. So you see, it over the last 7 years, I've been focusing on different investment instruments at different times. Don't just jump into all of them at the same time. You'll likely get overwhelmed and then lose your money. Tip number 4, diversify your investment portfolio. I'm sure you're wondering, why am I invested in multiple asset classes? The reason is because Different asset classes come with their own kind of risks. The stock market and the crypto market has high risks. Mutual fund, commercial paper, low to mid risks. Then talk about bonds, treasury bills, real estate, depending on who you're buying the property from. It's low risk. It's always good to have a diversified investment portfolio so that I can balance the risks between the high risk investment instruments and the low risk ones. If you only have low risk investment instruments like bonds, treasury bills in your portfolio, then you're going to miss out from making profits in the stock market or growing your wealth via the crypto market. And also, if you only have assets in the crypto market or the stock market, when there's a bear market, then you're going to be sad because you'll not be able to make any gains throughout that period. But when the bear market comes and you have assets in real estate market, you have assets in the money market, then you wouldn't mind that your stock and crypto market is underperforming because you can still get some gains in other asset classes. Tip number 5, know your risk tolerance. Like I mentioned earlier, there are different kind of asset classes and they come with different kind of risks. No two investors can invest the same way. This is something I say every now and then. Even though they're born of the same parents, attended the same school, work in the same organization, they can never invest the same way. I have some colleagues that have said that they can never get involved in the stock market or in the crypto market, but they invest in other instruments like mutual fund, bonds, euro bonds, and so on. The reason is because they know that deep down, they cannot afford losing any percentage of their capital. That could be you as well. And if you're just starting out, I expect that your risk appetite is going to be very low. So ensure that you do not go and invest in high risk investment opportunities. I've had people run to me and say that, oh, they bought a particular stock and the price is going up and down. I'm like, come on, that is how the stock market works. Prices go up and down within a short period of time, right? So if you know you cannot handle such movements in prices, then sell off the stock and go and buy bonds or go and buy a property like land where we know that the price only goes in one direction. Tip number 6, have an emergency fund. Investment is beautiful, right? But it's always good that you have an emergency fund so that you do not have to go deep into your investments when you have an emergency to solve. An emergency fund is simply 3 to 6 months of your living expenses locked in a low risk account. This enables you to have money to spend when you have emergencies like healthcare related expense or car breakdown or something your house got broken. You do not want to be in that situation where you have to liquidate your investment at a loss because you have an emergency to solve. Instead, you just go into your emergency fund and take money out of there and solve that expense. This helps you to maintain a profitable investment portfolio even if we are in a bear market. The last but not the least is think long term. Like I said earlier, investing is a marathon and not a sprint. Do not think that investing is a get-rich-quick path. Of course, investing has made people wealthy, people like Warren Buffett. It can also make you wealthy, but you need time. 10 years, 15 years, 20 years. So when I talk about investing, I'm not telling you that if you get started today, you're going to become wealthy in the next 5 years. No, right? You need time. You need time, and that's why we talked about starting early. When you start early, you give time for your investment to compound. Like I also said earlier, you may be thinking that 10 years, 20 years is far. It's not really far. Think about the last 20 years of your life or the last 25 years of your life. What were you really doing? Right? So time flies. But when money is invested, time compounds it. So these are my 7 investing tips for beginners. If you apply any of them, you're sure to be ahead of most people that get involved with investing. If you found this video helpful, please hit the like button, subscribe to this channel, turn on the notification bell so that you don't miss future videos like this. And please let me know in the comment section which of these tips you're going to apply today. Thanks for watching. See you in the next one.